Just let me know when it's ready. That's on. All right, I think we'll get started now. Thank you everyone for joining. Welcome to the panel today. My name is Junya from FrankieOne, looking after the Australian and New Zealand market across financial services. Today's session is really going to be about how non-bank lenders balance risk, growth, and customer experience at scale. Conversations are going to be around AML, fraud, and onboardings, and a trade-off of how to manage those risks without putting any friction across customer experience. So that's kind of the areas that we'll be talking about. I do have a poll to quickly go through for anyone who's joined today. Just want to get your thoughts on what your key interests are. So I'm just going to pop up the panel, or not the panel, the poll. So if anyone can just answer this question over the next minute, that'll be great, just so that we can get a sense of where everyone's interests are. All right. All good. All right, and while we're doing this poll, I will go through a quick introduction of the panels today. So going from the left of my screen, first up is Ben. So Ben is at Lumi, the Chief Risk Officer at Lumi Financial Services. Ben's been at Lumi for over 7 years and Prosper before that, with experience in the major banks across Australia and New Zealand as well. Next up is Marhadi. So Marhadi is CISA and ISACA certified risk professional with decades of experience within the risk and compliance space across banking and financial services space. Marhadi is the head of risk and compliance currently at Shift. And the last one, Royston. Royston is the Chief Strategy and Customer Officer from ScotPac, and Royston has many years of experience in the customer and strategy across risk, customer experience, marketing, and so on. So we've got great panels today, and I'm really excited to have this discussion today with the three of them. So we'll get right into the question. So the first section, we will be covering off where risk gets hard at scale. So this is an interesting topic. So the question will be, maybe I'll begin with Ben actually on this one. When your volumes grew at Lumi, can you tell us about some challenges in the processes and the team's workload, or maybe the systems that you've experienced over the past 7 years?
Yeah, absolutely. So I think Lumi's been through a pretty rapid growth journey since starting at the end of 2018. So we've been through this quite heavily. And I think one of the biggest things that we noticed, sort of starting with a small team, is we were able to have really good specialist knowledge across sales, across credit, sort of through that whole originations journey. But as the team got bigger, as the volume scaled, maintaining the same level of technical expertise as it comes to fraud, as it comes to KYC was really difficult. And we sort of ran into a few hurdles here as, you're starting to specialize the functions. We're bringing in resources specifically around KYC, around fraud investigations. And so, yeah, I'd say the biggest challenge for us has really been how do we ensure that the right level of knowledge stays within those teams, because it's not just about doing the processes. We're also trying to manage the broker, the customer experience to ensure that, they know what to expect. And especially in business lending, when you're talking about, complex entity structures, the interrelationships between companies and trusts, it's not always immediately obvious without the experience, when a deal is going to get really, really tough. And so a lot of the work that we've done, especially in the last few years, is how do we right size that education? How do we ensure that we're delivering it to the teams in a way that's useful and meaningful for them, so that they can manage expectations and ensure that we get that right outcome, so balancing that experience with our obligations.
No, it's great, Ben. No, so you mentioned about, experience across different functions, all these different complex things required, like knowledge is required to be able to operate those different, use cases. Maybe since you mentioned education as well, I'm kind of keen to understand from your view, Mahadi, from Shift, what kind of experience did you have from your end? Did you have anything different to what Ben's mentioned?
Having a good volumes is a part of the growing pains, right? I think, but it's a nice problem to have rather than no volume at all. So I agree with Ben where if this knowledge and you want to codify the knowledge so that it's become sort of like become an enterprise knowledge, you don't rely on one person because suddenly you can scale up. However, even then, you probably still have some problems where you need some such subjectivity that you need to look at a couple of different knowledge, different information, and you have to connect the dots. And that's where even you put bodies in, sometimes it's not enough.
Mm. No, that's an interesting point. Well, in terms of that, I'm keen to understand from your view as well. Maybe Royston, maybe since you've worked on a lot of customer experience and strategy across the
Mhm.
organization structure and all that, what kind of trainings and stuff did you put in place so that you can scale as Marhadi mentioned about the volumes and the growth? Just keen
Yeah.
to hear your
Look,
point.
I think, in any organization, whether it's in risk or strategy or marketing and customer, change management is so critical and so important, right? And it's that education, how are you onboarding your staff? How are you communicating with them? I think we all have annual compliance training programs, right? But how do you move beyond that being a tick the box exercise and everyone's just done, their half an hour every 12 months? I mean, how do you move beyond sort of this like constant communication and constant conversation with your team, so that what is important is kept front of mind, particularly as they're doing their day-to-day role. We don't want risk becoming sort of a secondary or a third order part of their day. We need to keep that awareness up, and that's, part of the ongoing comms training, change management plans that you should have in place.
Yeah, no, that's interesting. So, in terms of, when you mention about the volumes, Mahadi, just going back to that point about the volumes, was there any specific point when your manual process or review process became like a bottleneck within your organization? And just keen to understand how you kind of dealt with that.
Yes, of course. There are a couple of things. Is the bottlenecks could be because of a false positive that we saw, right? That's really killed the moral of the people that they're doing it. And they're doing all this hard work. They pick up all these signals, but it's turned out false positive. So it's very important that first is to look at, can we reduce the manual queue that coming up and then really take the air away from these people. This is back to the comment of can we codify all this triangulation of a multiple information into something that's smart, that really, if you know there's a negative signal here, can you neutralize it with any other positive signal? Or can you actually amplify it with another negative signal? Therefore, you need a human. Otherwise, the one that not important to be escalated, you can sort of like drop or put it in the low risk, and it can be reviewed as a portfolio rather than individual case. So that's a couple of practical examples that we do looking at this massive volume that coming in.
Right. Thank you very much. What about in terms of a company like Lumi who's growing massively, like over the last many years, couple of years, I know that you've grown massively, right? Over those years, I'm sure that you've come across a point where manual reviews become a super challenge, like an issue, basically. Just kind of keen to hear from your perspective as well. Did you experience something different to Mahadi? Did you do something very similar? Just wanted to understand the approach that you took as well.
Yeah, I think especially in the early days, we had quite manual processes. I think anyone who sort of operated in this space knows that, there are a lot of tools, there's a lot of automation available to assist. And so definitely bringing in, things around OCR for IDs. We've also brought in biometrics and automated checks on, PEPs and sanctions and things like that have definitely helped. And it essentially, say it's the 80% that you can carve out for those simple entity structures, those can go through really quickly, leaving the resources more focused on, where there's complex interactions that need to be understood and complex relationships that need to be unpicked.
No, thank you very much. So basically, what I got from the three of you for this topic on where risk gets hard at scale really is around making sure that your employees are trained up properly with, proper frameworks and proper plan to, get them trained with a vision of where it scales. And also from an operational perspective, managing those manual processes to make sure that you can scale without having to break your systems is very important. Great. Thank you very much. I'll go into the next section around risk versus customer experience. I might throw this one to you, Royston, actually. So where have you had to add a friction to manage like risks, and were there anyone who pushed back against that pretty hard? Was it your customers or was it your team that was pushing back on that in terms of adding the additional friction to manage risk?
Yeah. I think out of customers and our own team, I think from a risk perspective, that generally falls mostly to our own internal teams. I think we are constantly asking them to do more and more to kind of protect our business. So, I'll focus on what we do to help manage our teams and help them manage with the additional tasks. And I think fundamentally it comes down to making sure you understand and your teams understand why these checks are important and these processes and practices are important. I think if they understand what they're doing and why and what the outcome is, I think they're sort of generally okay to take it on board. Particularly given AML KYC checks are done during sales and origination processes. We're relying on our sales or our credit teams to do these things. They have targets to meet. So we need to make sure that they have that full understanding. And as long as I found, as long as you explain the why, you can minimize sort of the pushback from them. People generally come to work, right, for a lender, and they want to make sure that they're lending in a low risk way. So you've got to really, once again, focus on those comms and the training. And people understand when you put controls in place. Most recently, for example, we are thinking about putting some additional controls around lending to people who are supplying vapes, right? It's increasingly, an environment that's moving into the black market, and we want to make sure that if we ever fund anyone, that they're doing it legitimately. So we're asking people to make sure they check licenses and registrations, who they're supplying to, who their customers are. And I think that when we talk to our sales team, they understand that this is something that we should be focusing on. So they're have to do extra work. They know they have to do it.
No, that's great. So I guess it's very important to be able to properly have an understanding and an explanation of why you want to enforce those changes and add those additional risk frameworks to it. So I understand that that's very important. From you, Ben, since you're the CRO at Lumi, I believe you would have had to come across these kind of situations quite a lot in terms of, building the risk frameworks within the organization. Did you have anything different to Royston? Did you experience any strong pushbacks from your internal teams or your customers?
I think broadly our experience is very much aligned to sort of how Royston's talked to it. I think realistically, the people who push back the most are the ones who are most impacted by a change. And really it is around that understanding that, we're very much looking for the least frictionful way to introduce a necessary change for the business to protect us. And so, how do we manage it, manage the rollout, manage the change, manage the strategy there to ensure that we're getting that best balanced outcome for customers, for sales, for our credit teams, and for the business as a whole. So I would say, each change sort of has different impacted teams, different impacted parties, and really that's where it sits. It's just where is most of the change happening? But again, as Royston said, I think the education piece is key, and for us, especially the internal teams, understanding it well enough that they can educate the customers and the brokers as well, because that can be a really bad experience if controls are put in place and we're unable to articulate why this is necessary and why we've taken these steps.
Right. No, that's so you mentioned about brokers, I just wanted to ask as well. So from an external party point of view, like introducers and brokers, did they have any difference in the reaction to those different changes, or were they quite accepting? Were they accepting it as well?
Yeah, I mean, at the end of the day, it's all been accepted. But they deal with different lenders. Different lenders have different appetites to these things. So often there are conversations around, you're doing this, someone else does it another way. But again, it's around how you handle that conversation. Explain risk appetite. Explain, we maybe operate in a different sector, asset finance versus cash flow, consumer versus business, and how that changes the risk profile and therefore the controls that we choose to implement.
Yeah, no, thanks, Ben. How about you, Marhadi? I know that Royston and Ben kind of alluded to a lot around internal friction, internal massaging, but I want to hear from you around how it came across for customers. Like, how did customers react? Did you see any specific reactions that came across to you that you needed to put attention to?
Yeah, it's
Maybe
always
from a
good to
fraud
have this.
perspective as well, even.
Yeah, I call it it's great to have these healthy tensions like between all these parties. Keep us really be very clear on the outcome that we want. And if you think about from the brokers, Ben mentioned the brokers, they are a good voice from the customer perspective. And sometimes also telling us the customers sometimes actually value the frictions. Like say, for example, currently, if you open a banking transaction and that bank doesn't introduce a multi-factor authentication, which is a friction, you probably worry if they don't have it, right? And that sort of like the friction become expected. It's become, if you don't have it, it's actually your integrity, your risk management being question mark. So sometimes they are part of that. And there's I think Royston mentioned it. There are competing objective. The credit team wants it to be just give me it. I want to review the deals. We want to approve it as soon as possible. But they are, as long as we understand each of these competing objective and the outcome that we want, I think everyone is actually wants to work together.
No, that's great insight. Thank you, Mahadi. Well, for this section around risk versus customer experience, I guess it's around properly having the right, how should I say it, the messaging properly outlined so that you can deliver that message towards internal stakeholders so they understand the new processes and the changes, and why you're doing that is very important so that you can reduce that, friction from an internal perspective, and also from a customer perspective as well. It's important that you put those right friction in place so that you're protecting those customers as well as yourself as well. And once you start doing that, it just becomes the norm for those customers, and they'll adhere to those risk changes that you've applied. All right. Oh, great mentions. Thank you so much. I guess I'll move on to the third section around AML and fraud controls in practice. Maybe for this one, Mahadi, I might want to ask you first. So when you're advising someone, imagine they're building something from scratch. Let's say, they're building a customer onboarding journey from scratch. What would you tell them to prioritize from your experience?
Well, I'll probably start that. If you want to start this customer onboarding journey, definitely build it together with your business. It's at the end of the day is a business, right? If you put all the ML and fraud control right front and center, you might probably don't get the customer experience that you want. So measure both business objective and your let's say your loss metrics or fraud metrics or your ML metrics. Set the risk appetite with the business. There will be area that can be negotiated. There will be area that cannot be negotiated. Like for example, your compliance AML, that's given. Like we got to comply, right? And be ready to change. Like you never get a very perfect design. You just have to understand what indicators that you want to measure that tell you, hey, this design is no longer appropriate for us. Or some measurement, okay, we have to work 6 months in advance that we might probably need to change this process. Now, it will be good if you already built that process now with a view, hey, in the 12 months time, we might probably grow 10 times, 3 times, 5 times. Will it break now? Okay. Do we have the investment enough to do it? Do we have the money? If we don't have the money, you might probably compromise. Yeah, this is adequate for the time being, but we'll look at the change in the 6 or 12 months or even 24 months. I will mention as well as previously, friction is a currency. Friction is currency. Just use it wisely. Use it wisely, really clear. When you put friction, there's a value on it, right? Take out the friction and unnecessary friction, because you want also to balance that one. Like say, for example, we used to do this, like take as many data as possible because we may need it. Like that's these days doesn't work anymore, right? Can you pre-fill some of the fields, help the customers to go through it quickly? The third one, I might say, if someone can afford it, automate it, especially now. This capability, lots of this become a commoditized already. It's like there's a question like 7 years, 10 years ago, the question is, should we build it ourselves because it's a strategic advantage? But now with the good platform, do you really have to build it yourself? Okay, yeah. Might probably taking too long. Okay.
No, that's great. Keep going.
Yeah, the last bit is that I say back to that one is never a perfect solution. Just get ready to change.
Right. Now, I love that word. Friction is currency. Was that right? I just noted that down. I love that comment. Friction is currency. Okay. No, and it's great points that you raise as well. Just on that point, though, I'm kind of interested to hear, because I know that there are some people who's registered to this webinar, who's watching this webinar right now, who's very new to this space as well, and starting up as well. So I understand flexibility is very important and all that. Maybe just one tip from you, 2 cents. Is there one thing that you see that a lot of lenders underestimate when they're first setting up their fraud and AML, KYC, KYB stacks? Is there anything that you tend to see they're underestimating? Challenge question.
I would say that one is when we first start, we underestimate the number of a false positive from our PEP, and we are overwhelmed with that. Okay.
Right.
And having to work with our partners of how actually reduce the noise and make which one there's a higher risk that we have to quickly get in. That's helps a lot. That's actually is a massive help to the operation, because it hold everything. Like PEP, if you not clear PEP, it hold everything up.
Yeah. No, I guess, yeah, it's important that when you say PEP, I assume it's around screening of those individual PEPs. So understanding what you're screening against and how you build those screening algorithm and the rules and the customization is very important, I guess, and being available to mitigate those alerts is quite important, I guess. Thanks, Marhadi. Maybe Royston, from your perspective as a customer officer, what would you say to prioritize from a customer's lens?
Yeah, look, I think I agree with Mahadi around the, build with your business and make sure there's alignment. I think the one thing I will add to that is standardization, right? Make sure that, whatever processes you have, you might have different products that, every product follows the same process. That makes it easier for both, your internal teams, but also your customers, right? If you have, obviously everyone, once they get a customer and they want to increase cross-sell and increase, the revenue per customer you get. So you're trying to sell them more products, and you kind of want to create that standard process so they're not having to do things differently every time or provide you with the same documentation. How do you make that easy for them? And have the rules internally to say, look, this is a customer that we know, they're safe. We've really looked at them? Do we really need to force them to go through a process again, 6 months down the track if they want to do more business with us? So, I think if we have a standard process with some rules in place around currency and validity, I think that's probably important from a customer perspective.
Thank you, Royston. That was from a customer perspective, which is really important. Maybe I'll pass this on to Ben as well, actually. From a from your perspective, let's say there's someone that's built their onboarding processes. It was looking good over the first couple months, but then they're starting to see that, something's wrong. The process is getting bloated. There's a lot of traffic coming in, but it's just not operating properly. What would you say would be the first thing that you suggest them to look at just to make sure that everything's going well? Is there anything that you would suggest there?
I mean, I guess in that situation, what I'd recommend is sort of pull it back to the fundamentals and understand, what questions you're asking and why, right? Especially for things like KYC. We may be asking for identity documents to satisfy fraud risk, to satisfy our AML KYC requirements, to ensure that we understand who our customer is from a credit perspective. So, if those are getting intertangled and you don't know which ones you can push with an appetite and which ones are hard limits, from a regulatory perspective, pull back and understand that. And then I would readdress thinking about, okay, they shouldn't, unless, you're in a very specific industry, they shouldn't all be complicated. If it's 10, 20, 50, 70% of those, there should be some kind of streamlining and automation, and really being able to tell the difference between when something should be complicated and when it shouldn't is really important, both from managing perspectives upfront, then also resourcing and making sure that those processes operate effectively.
No, great. Thank you, Ben. No, I thought this topic was quite important, and I really wanted to ask you these questions from the senior leaders from the three of you, because I'm actually coming across a lot of situations where not just one, not two, but many people and businesses that are coming over to me and saying, "Oh, we're actually thinking of vibe coding this whole onboarding process from scratch and putting everything together, and then they're just doing that whole thing from scratch." And I thought it was amazing, like the things that they're wanting to do and wanting to achieve and where they're wanting to go is great. But I just thought that it's very important that the things that's important, like the risk frameworks and stuff, are really thought through properly. And as you said, Ben, fundamentals, having that perspective is very important as well. If you are building everything from scratch through vibe coding, as an example. So, no, thank you very much. That's amazing. So I'll go into the last topic, and then after that we'll go into Q&As. I see a couple questions in the chat, so if there are any questions, please feel free to type it into the chat box. All right. So last section is around designing for scale. So if your volumes doubled, for example, if your current customer acquisition, volumes doubled, what part of the onboarding stack would you be most worried about now? And what would you need to do immediately to minimize the impact? Maybe for this one, we'll start with Ben, since I've got you here. If you can give us.
Yeah, no worries.
Yep.
And we've had a little bit of experience in this in the recent years. So we've recently focused a little bit more on our commercial lending space, so the larger loan space, having traditionally been, operating more in the small business sector. And so essentially what we saw is, pretty rapid growth in what was, fundamentally more complex businesses, larger businesses. And so it essentially came back to what I talked about earlier, is where that complexity lives. And so the problems that we ran into is, we had really well-built systems for the simple use cases, but unfortunately, you can't just translate that across. So we had to bring in additional skill sets to help with the training, to help deal with the complex cases, and to start to identify, okay, in these situations, are there opportunities to bring in more standardization and automation? Because, at first glance, complex trust structures, interrelated companies, all of these things start to look a little bit more complicated. You've got to review documents. You can't rely so much on independently verifiable sources, the sort of external databases, I mean. And so, for us, building that capability out and identifying where those automation opportunities were was sort of where we focus. So, if a volume's doubled today, I imagine it's probably a similar sort of problem. It's, where are those manual processes? Is there now sufficient volume through them that they should be automated? And is that even feasible?
Thank you, Ben. As part of that process, uh, from a recent investment that you've probably made, don't need to be specific, but any recent investment that you made that actually made a big change or an impact from a practical experience?
Yeah, I mean, our investment in this space was more in the people. So we brought in some expertise in AML, KYC, compliance more generally, and just having that as the reference point for the business when we're designing processes just has uplifted the understanding and helped us to sort of pull back and think more around what does the long-term solution need to look like for us to continue to scale.
Thanks, Ben. Well, similar to Lumi, Shift has been growing exponentially, very fast. Keen to hear your thoughts as well, Marhadi. If the volume's doubled from today, what would be your actions?
Yeah, it's I very resonate with what Ben's mentioned about this is probably example of how the design grow, right? In the beginning, when we said that the complex structure, it was sort of like it's a subset, it's a small. So we sort of like, okay, if it's complex structure, the exception is a manual process, you throw it as manual process. But now it's getting more. And you're getting like, oh, how can I do UBO better? And then you start to think how you can understand the group exposure because of this complexity. Like you got many companies that on the face it doesn't look connected, but it's actually is part of the bigger group, and you start have to collect all this dots, and that's become hard. Okay. Or even trust. I mean, 10 years ago, like you have to read the trust bit, and now luckily you got the OCR, but the OCR also get a problem of a very old trusted, and then the OCR probably cannot recognize it as well. Some of the trusted even handwritten. So that sort of like bring to the second issue that I can see is the volume of in the middle of a digitization and the manual bank statement, for example, like you have to do this manual bank statement, and this one is there are lots of fraudulent statements, fraudulent documentation. I think you can start to see that in the industry, even the mortgage now, the bank doesn't want to accept your manual bank statement anymore because the trust level is low there. Now it's just that we have to keep up with that, right? We have to be quickly changed as well. How can we still get comfortable with the quality and accuracy and validity of the
Yeah. No, the bank statement piece that you mentioned, it reminded me of the recent one of the big four banks mortgage fraud case that was on the news the other day.
Yeah.
All right. No, thank you very much, Marhadi. Maybe okay, Royston, from your view, if your volumes double, which is an amazing thing, where your volumes are already large, if it grows double from today, what would be your actions? Keen to hear from you as well.
Yeah, okay. I think it's something that both Ben and Mahadi touched on a little bit, but I'll sort of expand on it, right? I would look at anything manual, right? Anything manual that is in your process, we should be focusing on, particularly if it's repeatable. It's a repeatable manual process, such as data entry, completion of forms, manual searches, going to get a piece of data. In today's world, right, that's so technology driven, data driven, with AI, all of that could be automated. So I think you really need to challenge yourself around how do you take away manual tasks, introduce technology, but you still got to keep sort of manual, checks where relevant. If we're talking about complex structures, yeah, the data is there, right, to build group structure entities to get director relationships. It's all out there. You just need to build the processes to get it and to build those um, company trees, identify director relationships internally, and then run the analytics to sort of flag any issues. And then you do need the manual review to look at issues, but hopefully everything before that used to be manual to go and pull reports and to manually build relationships can be done automatically now. And I think all of that helps the conversation around cost, right? Your CFO won't like if you're saying you're adding headcount at a 1-to-1 ratio as your business scale. So the more you can automate, the easier your conversation with your CFO will get.
Yeah, no, thank you very much. So, I think the key points, there's a couple key points, but some things to take away is making sure that you invest in the people, technology, and not everything to become technology driven, but making sure that you keep that manual element in between as well. That's good. So not this one yet, but just one question is maybe I might ask Marhadi for this one because I've worked with you for a long time. Um, is there any time over the many years from your career that you've kind of experienced that you made a wrong decision for implementing a specific technology in place? Were there any actions that you had to do? It's a different kind of question, but just keen to understand if you have any experience from that side.
Making mistakes a lot, Junya.
A lot.
That's easy to answer. It is I probably answer you with a example of where we sort of like make mistakes, but more of the decision that later on when we adjust. It's like, for example, everyone probably been aware of this middle name. It's like building a system and then we want to capture middle name. Originally thought, oh yeah, we capture middle name so that we can know exactly who they are, right? But at the end, once we do it, it's actually this middle name is causing lots of noise, lots of problems. And you see the driving license, try to verify it, doesn't need middle name. So that's we have to quickly and be able to adjust it quickly. Now, there's always this competing resources, right? If you build it internally and you want to change something, you're competing with these same resources that want to build a new feature in the product. So that ability to make changes quick, very important. Through another one is that when you come to people with one name, let's put Madonna, just Madonna, there's no last name. Your system that built 10 years ago just cannot accept it. And then it's just annoying when you register and we have only one name. I know it because my wife has only have one name. And stop the process. That a friction, like a hard friction. I like to see that. Can we get any other signal to say that, look, we know enough because your date of birth, your address, your mobile, or other signal say, even though you have one name, we actually know you. We allow you to go to the next step. And maybe later on, if we don't have enough confidence, we ask for your ID or liveness or biometrics. So that kind of ability to adjust and knowing that, okay, this is not right and make a changes quickly, that's very important.
Thank you, Marhadi. And I know that was a question that wasn't preempted. But thank you so much for answering. It was kind of something that I was interested personally. So, and thanks for bringing up your example as well. It's great. Well, I think we're just on time in terms of the agenda, and I just wanted to quickly jump on to answering some questions. So I can see a couple questions in the chat as well. So I might just start from that. So first one, I'll go with this one. What are the key customer service challenges faced in non-bank lending once customer accounts become active beyond the onboarding stage? Anyone want to take that one? What are the key customer service challenges faced in non-bank lending once customer accounts become active beyond the onboarding stage?
I can jump in and provide a view. I think particularly I comment from a perspective where it's a broker originated customer. Obviously the broker holds the relationship, slightly more so than the lender. Um, and I think unless the lender has built that relationship and then also trust with the actual end customer, any future communications becomes more difficult. So I think it's very critical, I guess, to think about onboarding processes that go beyond just dealing directly with the broker and how do you build a relationship with the actual end customer as well and create both um, like a two-way relationship there. Things like we've seen from a customer perspective, if you don't have that relationship or that trust, if you're sending out comms, if they've gone into default or missed a payment, in this day and age, people are thinking that it's a scam, right? And they kind of just ignore your communications and delete it. So, I think it's really that trust building that's important.
Yeah, I'll try that one, Trijun. Yeah, I mean, I've seen it from the commercial, like the non-bank lenders for commercial lending. Is the customers sort of like expect the commercial lending also give the similar flexibility like a consumer? That's sort of like expectations, and you just have to either quickly at that area or give that level of in the middle service to the customers. Because as you grow this, the customer just expect you have a apps, self-service, everything on the mobile. Can the system and technology and our process keep up with that?
Thanks, Marhadi, and thanks, Royston. Well, we have a couple more questions, so I might just keep going. So maybe the second one is, should biometrics be table stakes across the non-bank lending industry? Ben?
Yeah, I'm happy to take this one. So we've introduced biometrics in the last few years. Um, and certainly there was some initial friction around, why were we doing this? And I think we've seen some pretty amazing results in terms of the reduction of third-party fraud. So I think in terms of if you think not only about the sort of the lender and the lender impact, when third-party fraud exists, there's a person at the other end of that who's being taken advantage of. Their life is going to be impacted. It's a very horrible negative experience, even if it's ultimately resolved. And so we've seen, pretty amazing impacts for us, especially again, online primarily, operating through brokers, really getting confident around who we're dealing with. So whether it should be standard for everyone across the industry, that's for each business to sort of ascertain from their risk appetite. But I'd certainly say that, our experience has been, pretty stellar.
Maybe in addition to that question, I just wanted to add, so there's a lot of organizations that picks whether they want to do the biometrics document verification at the very beginning or at the very end of the process. Do you see any difference between those two? Just keen to hear your thought.
Yeah, I mean, I think with any of kind of process design like that, it's all around the customer experience, thinking about drop-off and conversion rates and all that sort of stuff. So, I mean, I think primarily how we tend to approach is, when do we need that information and when do sort of customers and brokers expect to provide it? So I think whether it's at the beginning or the end, as long as it's clear what's required, when it's required, and how that could impact what's been communicated, up to any given point. I think that's what's important. Of course, the more that you do earlier, the higher confidence you can have earlier on in the decision.
No, thanks, Ben. How about you, Royston? Coming from a customer strategy perspective, just want to hear your thoughts as well in terms of customer experience.
Yeah, look, I think this is very much something that I think Marhadi talked about. You need alignment with the business around this. And where in the credit process this should happen because you will experience different conversion rates or drop-off rates depending on where you are. And it's actually a live conversation we're having right now at ScotPac. And I think where we are starting to think about is, we're not quite there yet, is it may depend on the complexity, right, of the business or the type of financing that you're dealing with. So maybe if you're looking at a very sort of simple low value business loan, you might want to do it up front, prove and verify the identity before you then have to go through and spend the time and effort on your credit processes. But if you're dealing with large, complex organizations, maybe you want to go through the credit process first before you then, I guess, verify the identities towards the end so that you can make sure it's timely before you settle a deal. So I think it very much depends on, I guess, your own organization and how your, peers and around the exec table or senior leaders would want to implement that process.
Thank you, Royston. All right. There's two more questions. Marhadi, sorry, I didn't want to skip you, but was there anything you would have loved to add on top?
Interesting on the Royston's comment, right? If the ability to move the friction, either front or the back or the middle, it's actually interesting because if you see your conversion rate drop, you start to think whether you want to move it a little bit in the middle or the back to increase the conversion rate or reduce the drop off. And that's again back to that flexibility. Do you have that infrastructure to allow you to do that quickly? It's important. And of course, you do risk assessment on how your business view this and what's the impact of the business. For us, we look at this as potentially like a step up authentication depending on the signal that you got. Again, friction is the currency. When do you have to introduce this friction? Like depending on what signal you got in the beginning.
Yeah, no, great viewpoint. Thank you so much. This is around an AI question, I guess. So next one, moving on to the next question, by the way. So is anyone actually using AI in their onboarding or fraud controls today? That is one question that I would like to get answer from anyone here. They'd like to raise their hand.
Yeah. At ScotPac, we've introduced sort of an AI tool, not currently sort of part of our AML processes, but what we are in terms of our bona fiding of our actual clients. So we have an AI tool that has 8 skills that runs a variety of checks. Some of them include things like confirming geolocation against what the actual customer industry is. So, as an example, it goes and checks on Google Maps the business address, and if they say they are a manufacturing business, but it's a residential address somewhere in the eastern suburbs, obviously there's something wrong with that. So we have this tool run and creates flags and summarizes, I guess, its findings for us to review before we proceed with the settlement.
Thanks, Royston. Yeah, at FrankieOne, all of us are using AI as well so that we can optimize our, efficiency and all that. So anything else to add, Marhadi, Ben? Otherwise, I'm just going to move on to the last question.
Yeah, I mean, I think for us, we haven't incorporated anything primarily into the application process as such, but like you say, and sort of how you think about doing it, Frankie, from the sounds of things, a lot of those support functions, those manual reviews, that investigation, supporting and reaching further through the use of AI tooling is definitely possible. And then, of course, building those templates for sign-offs and things like that happen much, much faster when you can drop it in something and get that summarized really quickly. So that's sort of the edge of it for us at the moment.
Yeah. Same here. Like AI, we definitely, our principle now is if we have a problem, think first, can AI solve this? Think harder, can AI solve this? And yeah, we've been using it, like, for example, the mention about the documentation, like, can we fight AI with AI? Because we know that the bad guy is using AI heavily. Just the AI factors just amplify everything, like amplify the speed of change, amplify the threat, and you also have to keep thinking of how can use AI to just speed up all your processes. You cannot forget. You cannot ignore that.
No, I agree with you 100%. Yeah, we cannot agree. We cannot you know, not incorporate AI in today's world and moving forward as well. So it's really important that we all keep up with AI and what it can do as well. Otherwise, we're just going to be left behind. Yeah. All right. I see one more question, so we'll wrap it up after this one. So, what are some of the important criteria when you choose a KYC, KYB biometrics vendor in this space? Can they change over time during competitor analysis? That's a long question, but I'll break it up. So, first one is what are some of the important criteria when you choose a KYC, KYB biometrics vendor in the space? Anyone want to? Yeah, Ben?
Yeah, I'm happy to take that one as well because I think it's a question you're sort of constantly asking yourself, right? And I think the sort of first place to start is, as we've talked about a lot, the experience, the user experience, the customer experience. How do you compare to others? Because no matter what way you slice it, the vendor is, having an impact on your customer journey, and that's being compared to your competitors. And that becomes part of your offering. I think as well, really got to keep in mind that it's a pretty dynamic environment, fraud, KYC, AML and CTF at the moment. So you really need to ensure that, when you're thinking about vendors, they have to have an eye on the future. We've got the FES coming out, digital ID going live. There are a lot of changes in this space. And if you're sort of looking at onboarding right now, and that vendor that you're looking at doesn't have these capabilities on their roadmap, you're going to be compared to competitors who have this new, more efficient, lower friction process and technology. And that's going to potentially become a factor in how you compete.
Thanks, Ben. Anything to add, Marhadi and Royston?
I'll add one thing there is that very important that you need, of course, to do due diligence on your partners. On the partners is really whether the partners share the same values with you and can grow together with your business. That's very important. Just like Ben mentioned, that the technology will change. The way that we're going to do even the biometrics will change. Will the vendor also grow and then can keep up with those? That's very important because once you connect, usually it's very hard to break, right? And just make sure that you got a good due diligence.
Yeah, thank you. I think that answers the second point as well, as in which was around can they change over time during competitor analysis. So yeah, that's great. Great responses. Thank you very much. Okay, so I guess we're just about time as well. So I think we'll wrap it up now. So thank you so much, Ben, Marhadi, Royston, for your time today. It's been an absolute pleasure to have you on this panel today. And also really appreciate the people who's registered and who's listening to this panel discussion as well. I hope there's many things that you took away from this session today. Please feel free to reach out to any of us, whether it's myself, Ben, or Marhadi or Royston. Feel free to reach out to us over email or LinkedIn or anything, and just ask us any questions if you want to connect afterwards. And in terms of what's coming next, we will have this recording available for anyone who wasn't able to join the session. So please feel free to watch them as well if you missed like first half of the session, or if you want to share it to your teams. I'm sure they'll get a lot out of this as well. All right. Well, thank you very much, everyone, for your time today, and hope you have a lovely, lovely afternoon. Happy Thursday.